Good day, everybody. Still here. Daily Market Pulse, Tuesday, December 10th, 2013. We saw the markets, the stocks decline today. We saw it happen in mixed volume. The Nasdaq was in higher volume. Uh, S&P, New York Stock Exchange, pretty much similar volume to yesterday, so nothing terribly horrible. But of course, the Nasdaq increases because of the percentage drop in volume higher. Adds another distribution day, so now 6 and 7. Things are getting a little eerie, and of course, with the candle formations the way they are now, you start to wonder if there's it's not just going to be profit taking, that there could be a serious decline. So we'll have to see how that goes. Of course, we'll take a closer look at the charts. The interesting thing, of course, is the uptrend continues, and we still have everything still above an 8 moving average. So it's kind of like walking a tightrope. It's eerily scary. So we'll see how it goes. Let's take a look at stuff. Okay, Nasdaq on the screen. You remember the big push up on Friday? That we had really virtually a nothing day yesterday. Very quiet, and a slight decline back into the 8 moving average, and the 20-day moving average as well. So decent support. There could be support all the way into about the midway portion of this bull sash formation, potentially, and of course as deep and as low as 15.8, which is essentially the lows that occurred these 3 days as well. And maybe down a little bit more as well, just based on the high of the bearish engulfing. So this kind of zone and area here, 15.8 to 15.825, something like that. Deeper than that, you take it all the way down these series of lows down here, about 15.6 down to maybe 15.550. But otherwise, the bulls are still looking for a push into 16,000 and higher, trying to surpass the 16,100 level. Bollinger Bands are tightening as this has just been kind of going sideways in a sense, up and down for the last few days. We'll see how it goes. S&P, again, you see the big bull sash. There was a change of polarity down here at 1775. It came right into the recent highs, almost there. And then with a rising window yesterday, you were hoping for that to hold. I put a goal line across the dark cloud cover highs, a possible area, the other areas, possible support. The window you were hoping to hold, it closed through it, so that window is gone and done. The 8 moving average might hold the midway point as well. The 20-day moving average, of course, a series of lows all the way down into, of course, 1775 would be a trusted area in likelihood. But it's ranging, and the lows are still kind of going higher, ever so slightly. And so the trend is still up, of course, we know that. But is this forming the possibility or the likelihood of a rounded top? Is that what's going on here? So if I did this like that, and I started over here, and I say, okay, well, is this in fact with a neckline right across here? Is that what's happening? I don't know that for sure. It might be even extended a little further out for that matter. Could be an even longer period where it goes up, comes down, goes up, comes down, and eventually, it's hard to say. Don't know for sure, but just looking at the possibilities of what's happening, number of distribution days as mentioned, the trends are still up, but at any moment things could collapse. The candle formations right now are not that eerie, but there is a resistance up here somewhat. So we saw the Dow, it seems okay. Let's look at the Nasdaq. The Nasdaq, I've said many times, is the one that generally is the one we want to watch. Bearish engulfing high, and let me draw a line across the top here. There it is. There's the high of the bearish engulfing. We had a rising window with a spinning top. We had a bearish engulfing. It pulled back mildly into the 8 moving average, bounced. Now you've got the hanging man, spinning top, doji essentially. Not good in these levels typically. Yes, profit taking, yes, but when you start getting higher volume with these little declines and this kind of weird action, there's a struggle, there's a battle back and forth between buyers and sellers, and typically levels like this, usually you see a decline. So that could happen at any time. So you got to watch out for that. Stocks in general, but of course the index naturally as well. We'll look at some stocks, of course, at some point to discuss. But right now, indexes are the primary to look at. Let's look at the TSX. All right, TSX came into the 50, bounced, so it changed, change of polarity. It broke the support, formed a hammer, held, it collapsed, fell, closed below 1 day, closed below 2 days. It managed to just barely make it through yesterday, but holding below the 8 moving average. So look at a little upper shadow, even larger upper shadow, even larger upper shadow relative to the body. So large green candle, smaller, smaller. So things are fading and getting quieter and getting weaker. Here's a decent sort of muffin top neckline as well. This may not have enough. The way this looks right now, I mean, the bulls are trying and then they fade. They try, they fade. So they're not, I mean, they're winning the battle, but they're seemingly at this point getting pretty tired. The size of the real bodies tell you that there's a fatigue factor involved here. So look for sideways to lower, possibly. Otherwise, it's there could be where the bulls absolutely just say, we're in this thing, and where you're just going to absolutely put this thing pedal to the metal and then push it up to 13.5. That's about what it would take. So once they do that, then it likely exhausts themselves because they're already getting tired after only 3 days. So we'll see how that goes, of course, as well. Otherwise, you're looking at support down here at the lows, 13.2. And then, of course, resistance up in here at 13.450 to 13.500. US dollar, Canadian dollar. We had a dark cloud cover the other day. We had an attempt on the 6th, on Friday, to go back and made a new high. In fact, tested the high from the previous day on Wednesday. Then faded all the way back down, held the 8 moving average, held the 8 moving average again yesterday, and then faded lower from here. So you're looking to test the 106 to 105.50 area right now, approximately. This red line essentially where the shooting star high is. It could come from there all the way into the 20-day moving average, possibly lower as well. Of course, there will be possibility of some support as low as 105, but right now you're looking at one step at a time. Red line, the 20, and then maybe 105 thereafter. But it could all be based on a percentage retracement. So when you look at this, what's going on here? It's not what I wanted, but okay. Here we go. Here to, let's go down to here. So you see the 618 is right essentially where it is now. 50% is a little bit lower where the 20-day moving average is. So either one of those are possibilities. Right now I think the 618 at 106 is probably more likely just because there's more of a confluence of support there. We'll see how it reacts. Does it bounce? Does it not bounce? So watch for this one. And I guess any Canadians who are wanting to shop, this would be the time to shop in the U.S. as the dollar is weakening relative to the Canadian dollar. We could take a peek at the euro because the euro was showing strength, as you can see, higher, higher, higher. Real bodies are getting a little bit smaller with a little upper shadow. Now you're fast approaching that resistance area where the bearish engulfing high is. I can drop that down just a hint right there. So that's about it right there, 138.25 approximately. So that's the target for that. Treasuries woke up for sure today, big time. In fact, you can see the channel that it was in, right? It's a downward channel right here. And you're seeing essentially a breakout that occurred today. So we had a high wave at the bottom, a gap higher, and then another strong push closing near its session high at the very top. Into the 20-day moving average, surpassing the high of the bear sash as well, but also breaking the trend for the most part. So it's got to get through it a little bit better than this on the 20, but the 20 at least now is starting to show signs of at least flattening a little bit after these 3 days. So is it enough? It might be enough for it to continue at least a little bit higher. Next target would be into 132 to 133-ish in that area there. Otherwise, it may come back and retest 131 to 130. Yeah, well, we'll just call it 131. So treasuries still look decent. We can look at the Japanese yen because the Japanese yen was looking like it was about to collapse. You see the support area below. It came off with a bull sash, went up 2 more days, came all the way back severely. Paused somewhat yesterday, threatening, looking like it was about to drop, like it was about to just collapse and break down. And then today, bullish engulfing. So not bad. It went a little bit lower in the early stages, gapped lower on the open, went a little bit lower, then reversed, went higher. So the support area from the bull sash area, essentially in the prior support from back a ways, right there, the low from back in May 2013 seems to be holding for now. So I like what I see here in terms of the reaction. Obviously, the stop ends up being 0.009650. That's the area right there. That zone is your stop. But right now, this test of the bull sash, the bullish engulfing, I like this. I like the fact that it could actually bounce. Next target would be the high of the bear sash. and then ultimately all the way into, I think this area right here would be of importance, because I think that was kind of a change of polarity area right up there. There was a support there that was broken severely, and it never came back to test it. So I think that would be a logical place for it to go back and test. So I like the yen from that vantage point. Gold was extremely strong. Came down, big sell-off, spinning top, morning star, which was actually pretty significant. That was a pretty reasonable to moderate to morning star. Because 3 days thereafter, essentially testing that same low at 12.10 to 12.12. And then needed to surpass essentially 12.50, which it did so today. Came off the 8 moving average, gapped up off the 8, pushed off through the 12.50 area, through the 20-day moving average as well. Taking a small breather right now after hours. Next target comes into 12.80, and then eventually as high as maybe 13.10 to 13.20. The ultimate, of course, being 13.60, but that's a while away. As all the trends are still somewhat to the downside. And silver, just to take a quick peek, silver is essentially the same, coming off the $19 level. And you see it formed its own morning star, faded a couple days, and then blew through, again, the kind of resistance area. Came through, the highs here would be right where it is right now, 20.35 to 20.40. But really it needed to break above $20, and it did so, including the 20-day moving average. It also bouncing and at least pushing off the 8 moving average as well. So Bollinger Bands are still kind of tight, need to open up. You have a 50-day moving average of probably a small cluster up here near 2185, but the ultimate target becomes 22 to 2250, and maybe it's even as high as 23 ultimately. So silver looking pretty healthy. We might want to take a quick peek at the financials. XLF, it really got stalled out here at 2160. So spinning top, shooting star, spinning top, bearish engulfing, and then another one here, then down, bouncing at least temporarily, but then a shooting star and back into that 2160, and just cannot muster up anything at all. So it's adding more weakness every day. Not looking great. Let's go look at oil. Okay, so with crude, sideways, bounce across this 92 to 93 level down below here. It flushed temporarily, crack and snap, came into 92, bounce, came right back in. Buying opportunity almost immediately on that signal. If you wanted to wait, then you needed to close above 95. It did so back on the 3rd, and then has just continued to grind into the 50-day moving average. I was a little surprised to see it actually push through into 99 so quickly. I thought it might actually pull back into the 8 moving average or back to the 95 area based on the candle formations, just based on the likelihood of a pullback. But crude can do some interesting things sometimes, and so everything looks strong. It held reasonably well. The lows were holding very, very well, right at about 97 to 97.20. And a huge push through from the 97.5 area all the way into 99. This is where I think it could at least take a small breather, pull back at least a little bit. But again, I said that before and it never did. But ultimately, the way things are looking now, 8 moving average is rising aggressively. It's over the 20. The 20 is rising as well. And everything's kind of sitting here on the 50, looking for the 8 to maybe cross. And so at some point or another, we're looking from 99 to going to 101, and eventually from 101 to 103. Even 104, but 103. So those are the goals ultimately on crude. So take advantage of that if you can. Wouldn't that be nice? That's crude. Natural gas we can look at as well. All right, natural gas just keeps going. So it came into the high right here, broke through, held 2 days, and then just pushed off hard. Very bullish move, higher, and then a little bit of a pause. New high with a doji here, essentially. Target would have been probably, let's see here. I guess it'd be right in this area right here, approximately there. And the next one up in here. So those are the targets on the way up. Still looks pretty strong. If it does anything like crude, which is essentially was so close to the next target, it essentially just swiped right at it. It could do that again. And then, of course, look at all the green candles. It could just exhaust itself at that point. But we'll see if that happens ever. This still looks strong. Doji tells me profit taking, just be a little cautious. But you're so close to the target, there's no point in losing when you're that close to the target above. Small caps, risk on. doing like pretty much everything else, into the 127 to extension at 114 in this case, faded into the 20, bounce, rising window a couple days back sideways, and a drop back to the 20 again, essentially filling the window and blocking that out, negating it now. So it's holding, and the trend is still up. You can see all the series of lows are still clearly rising this way, right? All that is still rising, so it's holding that for now. Maybe best to actually put a thicker line and draw that very, very handsomely. In fact, let me make it as a dashed line so that we can see it more clearly. There's your trend right now, and it's holding that trend right now. Question is it in a channel? It looks like it's actually, that channel is actually weakening, meaning when you go to the top side, you didn't really ever have anything that actually matched that. So you see how that's actually tapering off, and that may in fact be tapering off. So it's kind of like now or never. It needs to bounce and get through 113, 114, and then eventually get back into the 1618 extension and possibly shoot for the top of the channel, or this is a done deal. So with the number of distribution days, once again, it starts to make you wonder. We'll see. We will see. All right, transports. So again, into the 127 to extension, forms a shooting star, fades, sells off, goes back to the polarity area where it broke out earlier and tested it once before and tested it a second time. Now it bounces, and then again today makes a new high, but fades and sells off into the 20-day moving average, looking to probably come back to retest 127 once again. It has yet to close below the 20-day moving average, but if it does, it could do so tomorrow. If it fades below this and stays below, but there's still immediate support right at 127. Trends, of course, everything's still up, but again, that same kind of scenario, thesis, hypothesis. Is this in fact forming a muffin top with a neckline across there? We will see. All right, let's look at retail. Sideways in a box formation. Interesting thing about retail, it came all after a rising window. It actually blew lower. It opened lower, faded. Look at the low today. It came all the way back down below 60 through 60 to 59.50, and then came all the way back to the window again, closing with a green candle, higher close relative to the open, but it still finished lower for the day compared to yesterday's close. So it's a lower session today, but that's a nice attempt at a bounce for the bulls. So if it's got anything left, it's got to get through 60.50, and you're looking to go back to 61 and 61.40 to 61.50 area essentially. Otherwise, a close below, a significant close. This little candle here was not a significant close below $60. That's not enough. A close similar to maybe where the low of today was, something like that, somewhere in there. 59.50 to maybe 59.75. That might be a significant enough close on the downside if the Bollinger Bands are opening to allow this to drop even further. So watch for that in retail. Let's look at SMH. SMH, kind of like a cup-like formation, but also ascending triangle at the same time. You see the dark blue line. All the pressure was to the upside. It broke resistance 41.50, gapped up on Friday. Went even higher again today, but as soon as it gaps higher on both those days, Friday and Monday, it immediately takes profit, meaning based on the shape and design of the candle, spinning top, especially with a higher open, lower close, profit taking, and so you'd expect that maybe more of the same could continue, or it might come back and retest the window and or the 41.35 area, which was the breakout area zone, which it had not done yet. So it may close that window down just below. We will see. So that's the area to watch out for. If it starts to close down below the 8 moving average, that would also happen to be the polarity area. That would then be a falling off the roof, meaning that everything's slipping, sliding, and falling, and you're looking at an immediate sell signal following that maneuver. All right, let's look at the VIX. The VIX had 4 consecutive closes above the upper Bollinger Band. You expect some kind of reversion to the mean, especially since it's hitting a window as well as pretty much the window. I guess we'd say it has a resistance area. It faded immediately on Friday following the news of the unemployment numbers. Markets, of course, gapped higher. This gapped lower. That falling window now becomes an area of potential resistance. The moving averages are there as well. The old window is still there as well. So there's a fair amount of resistance in here. So if it's going to go through, it's going to have to do it with vigor, which, as we've said, it's possible the markets could just collapse all at one time. meaning the VIX would then just absolutely catapult through all of this, through 15 into 16 plus. Next area of target would be, once it gets through 15, you're looking at 18. So it could be quick because there's nothing but air into that area. We'll have to see. So it closed down yesterday and then gapped up on the open today, faded a little bit, but a higher low, a higher high, and finishes similar to a dragonfly doji, essentially. So an indecision day, but right into the window. So there's resistance there for now. It has not filled it. It doesn't mean it has to fill it. So the next stop, might think it's going to go higher, would be the low of the green candle here on the 5th of December. And that's 1470. You'd be looking for 1470 next and possibly into 15. A close into 15 or higher, I'd say the window is done, negated, adios, gone. And then you'd be looking for possible higher at that point right away, especially if we see a fair amount of weakness in the markets and indexes simultaneously. Okay, that covers our markets, our indexes, and so on. I hope you enjoyed that.